Hello and welcome to the Community Voice. I'm Fara Sax. My guests today are Sachin Mehrotra and Errol Essinger. They are from the Association Lending Services, which provide insights onto their company's strategic approach, challenges that face the market of their industry, and key factors that contribute to the company's sustained success in financing from home ownership and condo association. My guests join me today, and I'm really excited to talk about everything that's going on in the condo world. Welcome, guys.
Thank you, Farah.
Thank you.
Oh my God! Oh my God!
Welcome.
Wait! Don't pass that $100 bill. Wait a minute. What is this about? Welcome. $100. Like this is the shortest little $100 I've ever seen.
Well, we want to make sure we're not arrested.
Well, this is cool. So talk to me. Talk to me. What's going on? What is going on in the condo crisis?
Before we get into that, I just want to make a statement. Association Lending Services.
Yes.
What our objective is to keep the condo owners in the condos so they don't have to sell and not have the stress of what is going on in the condo industry.
Absolutely. Talk about your background, Sachin. How did you come to this industry and your wealth of experience that you bring to it through the two Association Lending Services?
So, Farah, thank you. I've been in commercial real estate business, commercial real estate financing for about 20 years now, and condominium associations about 14 years. And in the recession about 2012, 2013, I was doing commercial real estate, and then I got into association financing at the time. It was a one-off deal, and slowly but surely I realized this was completely different business in itself. So I've been doing this for the past 14 years now, association financing, where we provide financing to community associations. And in this tough environment, especially since the demise of Champlain Tower South and all the changes in the legislations, the need is critical, and people need help now.
And Earl, talk about how you came to work with Sachin as the marketing partner.
Sachin and I have known each other for 8 or 10 years. We met at a seminar, and I've been in commercial lending, I've been in real estate, was in banking, and Sachin, during one of the conversations, he had explained that this is a niche area of lending that nobody is doing at this point in time. And he invited me in to work with him.
And as we move forward, let's talk about the condo crisis that's happening. And,
Sure.
And how did we get into this crisis here in our beautiful paradise home in Florida?
Condo associations, community living, association living is very, very prevalent. We have about probably 500,000 associations and going more each day throughout the country, and probably about 50,000 associations and probably higher as we are speaking. So the association living model is very huge, especially down here in Florida, and submarket of South Florida is tremendous when it comes to community associations. And these community associations, they are not for profit. They are made to take care of the common elements of a condo association, of a homeowners association, or a cooperative association. For the most part, here in Florida, we have condominium associations. And before the demise of the untimely, horrible tragedy of Champlain Tower South, things were pretty loose in the sense that we did not have any regulations when it came to reserves allocation. And majority of the associations did not have to put away reserves because there were no state requirements. And after the demise of Champlain Tower South, things have gone from being very loose from one end to the other end. And at the same time, the cost of operations, cost of maintaining these older structures, the cost of doing all the deferred maintenance, everything has gone up. So you see the cost of materials, cost of insurance has been sky high. operating cost, all of those things put together before these, and then you have all of these legislative changes that are coming in at the same time that require associations to do the structural integrity reserve studies. And as a result of that, they have to put away 100% of those reserves subject to the lifespan of that specific line item or the component of the building. So as a result of all of these things, the monthly fees for these individual unit owners, whether they're staying in a condo association or homeowners associations, probably more so in the condominium associations, the cost of maintenance and the monthly fees have gone from $375 to $775. Just because of the rising cost, and now they have to do the reserve allocations, and in many cases they're approaching $1,000 plus, which is causing undue pressure on people's financials. And you are seeing all of this condo crisis being talked about, where so many properties are coming on the market and people are having to put their units on the market untimely. So it's just, unfortunately, even though the law was done with the best of the intentions, given the rising operating costs, and we didn't have anything else in place prior to this, so we have gone from one end to the other end, and anytime you overdose something, you have extreme reaction, which is why we have been reading about condo crisis here in this Florida market, unfortunately.
And how does Association Lending Services step in to help mitigate this?
Sure, thank you.
Because it seems that for someone that might be on a fixed income, that assessment is just really out of their fixed income and causes truly hardship.
Absolutely.
And it's out of control. It's disproportionate.
Indeed. Look, if you're living in on an average, if you're living in a $350,000 condominium and you're having to pay $950 a month. Imagine for a second somebody who's living in a $350,000 condo and is having to pay $950 a month in monthly association fee, probably have a two bedroom, 2-bath unit, about 1,300 square feet, and now they have this almost close to $950, $1,000 almost a month in monthly fee before their mortgage payments, before their property tax, before their individual condo insurance. That really wrecks their monthly budget, especially people who are retired, who are on a monthly budget, and even people who are not retired, they're still working, both people are working. It takes away a significant portion of their monthly disposable cash just to pay for mortgages, property tax, insurance, and the monthly fee. And what happens as a result is many people, they're just caught in between these hard places that they have to put their units untimely on the market, and that destroys everybody's equity. And associations have not done these. They should have been doing these things timely over a period of time, the deferred maintenance. But unfortunately, there has been a lot of deferred maintenance, and now when you're doing everything at the same time, is causing real problem on their balance sheets. And individual homeowners don't have $30,000, $40,000, $50,000, $80,000, depending upon the scope of the job. They cannot come up with this in a very short amount of time with that kind of cash. And so those heavy special assessments really cause significant issues on the market value of these units.
So what do you do as a lending service to help mitigate that?
Sure. So when it comes to associations are not for profit. They are really in the business to take care of the common elements of an association. And unit owners, like I said, for the most part, do not have that kind of disposable cash, $50,000 to $80,000, that they can come up with in the next 60 or 90 days. And the association has to take care of common area elements. So what we do is we guys provide bank financing to the associations, and we can stretch out these payments over 10 years, over 15 years. So imagine if you have to come up with $30,000, $40,000 in the next 90 days, but if we can do the financing to the association, which is to the corporation, not to any individual homeowner or the unit owner, there is no personal guarantee from any of the unit owner, unlike their personal home loan or a commercial real estate loan. There is no first lien, first mortgage on anybody's individual unit. The loan is given to the association, and we can stretch it out over 10 years, 12 years, 15 years. So now that $20,000-$30,000 nut over the course of next 19 days is very much palatable because it's $102 per month, and usually there is no prepayment penalty. So when you can pay something in a manageable way, which is $102, $150, depending upon the overall size of the job over the next 7 years, 10 years, is far more practical, and it keeps people in their homes, and you don't have so many units coming on the market, and you can take care of the building's maintenance, which helps everyone.
And you have your closest competition. They differ from the way you operate and the way that you're able to secure funds?
Sure. So there are, what we do is, this is all we do. We guys, our technical expertise, our level of experience, our quality of service, because of the fact that this is all our company does, nothing but association lending services. And in the past 2 years, the market has become significantly different. You have banks, local banks, smaller regional banks, they have had their own issues, whether it's too much exposure to commercial real estate. And this is a niche business. It's not the most sexy business in terms of the return on investment. As a result of that, it's very hard for these associations nowadays, especially given the financial burden that they have been facing, and the local market has been going backwards because of their own commercial real estate issues, too much exposure. So we guys deal with, we are a wholesaler in the business. We deal with the niche banks. They do nothing but, and for the most part, these banks are out of Florida, and this is all they do. And we guys underwrite to begin with. We underwrite every single deal that we look at. As a result of that, because of this is all we do, our technical know-how and the expertise, we probably close these transactions on an average about 45 to 60 days. Our closing rate is about 99%. We do not start with something that we cannot finish. So having somebody who have significant experience in this line of business, especially in this market, because this is not the time to have on-the-job training. And given the scope of the relationship, this is the largest relationship on the balance sheet for any association. It will be larger than what you're paying your property management company, what you're paying the landscaper, what you're paying the CPA firm, so what you're paying your attorney. Having such a large item on your balance sheet and not having professional representation really hurts the association in the short run as well as in the long run.
Interesting. Earl, we're talking about the associations and why they need special assessments. Can you speak to that?
Sure. The associations need special assessments in order to pay for the improvements and the repairs that are required in the inspection reports, the 40-year, the 50-year, the timeline inspections that come in. And right now, as Sachin had mentioned, the assessments are so high because the repairs and improvements haven't been done over a long period of time. So now they have to do it, and it's a short-term type situation where they got to come up with $40,000, $50,000, $60,000 in one shot. And I'm a condo owner myself, and I'm seeing it. So it's difficult to do. And what we've done is figure out a way to help these condo owners, because a lot of them are forced to sell and move out, go to God knows where.
And how, and then think about where do they do with that money? Where do they go, since the cost of real estate is so high anyway? So it's a catch-22. We keep going around in that hamster wheel.
It's a very difficult situation unless you go into North Florida, but different places in Florida have the same problem. And unfortunately, the state is not addressing the issue until the next session starts in March. By that time, a lot of people have sold their units or trying to sell them, and the values have gone down as a result.
What is an attractive alternative to possibly large special assessments?
What Sachin?
As if there is such a thing as an attractive other.
Well, the attractive other is a loan to the association that's spread over 5, 10, or 15 years, so that you're not getting hit with a huge figure right at the, they get a notice. You got 90 days to pay it.
Is this done per unit, or is this done from
It's
the
done
association?
to the association. It does not affect the unit. It's a loan, it's not a mortgage. There's no personal guarantees from the condo owners. In essence, what they're doing is reducing the amount that they're going to be paying over a long period of time rather than 40, 50, 60,000. A lot of them don't want to move. They have friends, they've been there 30 years. So this is their alternative, is to have the association speak to us about arranging financing for them. It doesn't affect the homeowner. The homeowner can still finance his individual unit. But this alleviates a lot of the tension for the people. And a lot of these people are retirees and can't afford those big hits and didn't expect them.
Absolutely. And the association, what has been their feedback of them participating with you and the lending services you provide?
The feedback has been very good, because the alternative is we gotta sell our unit. We're gonna miss our neighbors. So, we tell them we need certain documents. Sachin can underwrite them and save 30 days in the processing of these loans. And he can see right away, can we do it, can't we do it? In some cases, we may be able to bring in private investors to do it.
Absolutely.
Because of the situation with their documents.
And which leads me to my next question. How does the association loan impact those owners who do not want to participate?
Sure. So association loans are given to the associations. They're given to the corporation, because association is run by a not-for-profit corporation. And these loans have tremendous flexibility. And what I mean by that is, if you have 200 homeowners, unit owners in a high-rise building, and 25 of them want to pay their proportionate share in full, they have that option. So association can borrow less money, because those 20 to 25 unit owners don't have to participate in the loan. They can save on interest. An association can help those people who do not have that cash available immediately over the next 60 days or 90 days. So it gives a huge amount of flexibility. But on the flip side, if you force it onto people and you make them come up with something that they really don't have, what happens is now you are putting them under tremendous financial pressure. And as a result of that, association cannot, if you go ahead and sign a contract with the roofing company, with the concrete restoration company, you don't have all the funds secured yet, and you're going too fast. And you could have issues down the road in collections, because those people did not have the cash to begin with, and you put them under the gun. Those who had the cash, 10%, 15%, they're fine. They can save money on the interest. They don't have to participate in the loan. But now it becomes a manageable situation for the association, so they can do these projects timely and take care of everyone, those who can pay and those who want to have a stretched, those who wish to pay over time.
And how does the association loan give more financial control
Sure.
to the association board and the property management in managing the cost and the time with their cash flow, and how does that component work?
Sure. So anytime you need to do large repairs because they haven't been done, or there was a hurricane, something happened, and you got to make these major capital improvements, capital replacement projects. Really there's only one way of doing it. Either you have the money or you don't have the money. And in the event you have the money, which is primarily coming from your savings or from your operating account, and especially for an association, you have extra surplus money, you have money in the reserves, but many times that is not the case, and now the board members or the property manager, they're waiting for these individual unit owners to go and find their own money. And what I mean by that is if they go to an individual bank and they go ahead and put up their unit as a collateral, which is individual owner finding their own financing. So imagine if you have 200 unit owners, 300 owners, and these people are running around to 15 different banks, and they have to qualify for that. They have to show their past 3 years of tax returns. They have to give personal guarantees. They have to engage a title company because there's an appraisal, there's a title search. So the cost of doing business and the time. In the meantime, the problem with the building is getting worse and worse and worse because you don't have all the funds to take care of that issue. And you are piecemealing, so you're calling the same roofer and telling them, patch this, patch this, patch this, well knowing that the roof is completely done with its complete life, and well knowing that 6 months, 4 months down the road, you have to go ahead and replace that roof. So now you're bleeding more cash from your balance sheet doing all these patches while you're waiting for 150, 200 people to find their own individual financing, and you have lost complete control. You cannot negotiate with the contractors because you don't have the funds secured, and you're bleeding more cash because you are putting good money behind bad money, and it just becomes a huge problem, and you lose the entire control. As opposed to if you have the loan secured, you know that you have $1.5 million already, you have a commitment letter to the association from a bank that just only deals with condominium associations. Now you can sit down with your vendors, you can engage your attorney, the attorney can look at the contract can go over the roofing contract, concrete contract. You can negotiate and sit down with all these professionals peacefully versus not having the money, because otherwise it becomes a nightmare scenario.
Absolutely. And since we're talking about the loans, give me some of the general terms, the structure, the minimum, the maximum loans that are available through the association lending services,
Sure.
and the availability for associations to engage with you regarding these loans, securing these loans.
Sure, absolutely. So these loans, the association loans, are typically, I would say, average loan in the South Florida market is probably about $1.5 million. As far as our range is concerned, so we are a wholesaler in this business. This is all we do. We have niche relationships with these banks, which is why we are able to move much faster, because we take care of the underwriting up front. And typically speaking, in terms of the structure and the terms, the loan is given to the association. You have what's called the draw period during the construction phase. So let's say if you have a loan for $1 million for doing all the roofs at the same time. So during the course of the draw period, you are drawing the monies as and when needed. So when the roofer gives you a draw request, you send that to the bank, and you're paying interest only on those draws until the construction is done. So at the end of let's say you have a $1 million non-revolving line of credit, which is solely dedicated for, in this case, roofing. So during the course of the construction of the 12 months, you are paying when the money is taken and how much money is taken. So let's say at the end of the 12th month, when the construction is complete, and now you have a balance of $985,000 in this example, that becomes a term loan. So that term could be 5 years, 7 years, 10 years, 12 years, subject to the financial strength of the association. And it's not a balloon mortgage. It's completely satisfied at the end of the term. So the balance is zero. But in the meantime, if after the third year, fourth year, association decides to pay the loan off in full, there is no penalty. You just pay the interest due date and you're done with it. So, and typically the interest rates on these things are, you have the 5-year treasury, 7-year treasury, 10-year treasury, and typically 5-year treasury right now, I think average of 5, 7, and 10 as of right now is probably around 4.30. So typically you will see anywhere between 250 basis point to 325 basis point over and above that. So if we are at 4.30, you're looking at anywhere between 6.5 to 7.5, somewhere in that neighborhood as of now. Of course, it's subject to market conditions, but these are fixed rate loans. You don't have any kind of surprise element. The rate is typically fixed for 5 years, 7 years, 10 years. If you go past 10 years, typically we see there's a rate reset at the end of the 10 years because these are commercial loans, so you don't know what's going to happen 10 years from now.
Right.
But bulk of the associations take these loans between 5 to 10 years, and those interest rates are fixed. So it really helps the association members have a manageable payment.
And what are the pros and cons with doing an association loan versus a regular conventional loan, so that it's created a win-win between both parties?
Sure. So as far as the association loan is concerned, the second option is unit owners have to come up with cash, or if they don't have the cash and the association decides not to do a loan for the entire association, which is the corporation that runs day-to-day operations, then those unit owners have to come up with their own cash. So they have to go out there, go to a bank, submit their financials, which is typically 3 years of financials. Those who are working, they have to supply their copies of their W-2 tax returns. And then it goes to the underwriting for that individual unit owner's loan. And that underwriting takes time. It could take, give or take, 60 to 90 days. Then once the underwriting is approved, then you have, of course, there will be a separate appraisal. Then the bank hires an individual appraiser to go out there and appraise that unit. There will be title company that will get engaged. They have to do the title searches. So all of that cost and time adds up for these unit owners, and some of the unit owners may not qualify. So
excuse me 1 second. Let me
absolutely.
just add on that these banks, particularly down here, won't give individual loans if there's problems with the condominium and the roof is caving in, there's water leakage, etc.
And they're also talking about the 40 to 50 recertification and all of that. So it becomes like a real snowball effect.
Exactly.
In the couple of minutes we have left, who do you want to reach right now? Who in the audience would be an ideal client for you? Where do you service? Are you just in South Florida? Are you in the north part of the state?
Well,
is it the Surfside area, Miami Beach?
Sure. So we are based out of Florida. So Florida is home to us, of course, South Florida. So all the associations here in South Florida, but we are not just limited to South Florida. It doesn't matter to us whether the loan is in Tampa or it's in West Palm or it's in Sunny Isles or it's in Aventura or it's in Jacksonville. Or even for that reason, we are able to do this outside of state of Florida. So anytime there's an association that has major maintenance issues and they need significant cash because of the 40, 50 year recertification, because of the milestone inspections, that's who we cater to. So we're in the business of catering to community associations, condominium associations, and the homeowners associations here in Florida and beyond.
We are dealing with property managers, board members.
That's right.
Those are the contacts. They're the ones that are running the show, particularly the property managers that have a wealth of knowledge. A lot of the board members were in different fields before they retired. So the property managers are a key. They understand what has to be done. They know how to prepare financial statements. And that's a big target area for us.
Wonderful.
As well as the CPAs who provide specialized services to this business, to the community associations. So this way they are aware of our services, and what we provide is really what makes it viable for these community associations.
Absolutely. Associationlendingservices.com for more information, to get the word out, help with special assessments, help mitigate some problems so that grandma can stay in her condo and not have to move far away and be close to her family. Earl, Sachin, thank you so much for being with me here today and unraveling this very complicated issue for our community, providing services and product to make it easy for our customer and Thanks for the $100. I'm going to go spend it, all right? Yeah.
Get change.
I'm Fara Sax. Thank you so much for joining me. Until next time, take care of yourselves and each other. Have a great day. And a special thank you to Julian Chang, who now has a second location in Pinecrest. Go visit his boutique for all your clothing and accessory needs.